Be Wealthy and Smart, episode 1148.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the Fed meeting, but before that, I want to talk about a couple of other things. First, I want to say a huge thank you because Be Wealthy and Smart just passed 9 million all-time downloads. That's such an amazing milestone, and I'm so grateful for you listening and being here during this time. And if you've been a listener from the beginning or you're a brand new listener, I always appreciate you taking time out of your day to tune in. So thank you so much. So today, what we're going to talk about is the Federal Reserve is meeting tomorrow and Wednesday, and they are expected to raise interest rates by 25 basis points or 0.25%. There's a 99% probability that's what they're going to do. But what I'm concerned about is the difference in narrative that we're seeing. You see, the markets have raced forward in January and have had their best January since 2019. The S&P 500 has gained 6.2%, the Nasdaq's up 11.04%, and the Dow is up 2.5% in January. Many of our investments are up double digits and look like they have annual returns already just in the first month of January. And there's really two reasons for this. One reason is because last year was such a dismal year in markets that we are seeing a bit of a bounce. When you have things that sell off so sharply that they do tend to bounce back sharply. The other thing is, I think, a misperception of narrative. And what I mean by that is it seems like a lot of the markets are thinking the Fed is either going to pause or delay increasing interest rates. But that is not what the Fed has said. The Fed has said they're not going to stop raising interest rates. And once they raise interest rates in January, their next meeting will be in March, and they'll probably raise another 0.25% in March. These increases of interest rates are running at about a 3% inflation rate, but our inflation is higher than that. And so for the Fed to be able to stop, we're either going to have to see inflation come dramatically lower, or they're going to keep on raising interest rates. Once the market realizes that that's what the Fed is thinking, and I think tomorrow and Wednesday when the Fed is out talking, they're probably going to surprise markets a bit with their stick-to-itiveness about continuing to raise interest rates. And even though the job market has a lot of layoffs and we're seeing weakness there, the Fed has continued on their course of being very focused on bringing inflation down and using interest rates to do it. So if that's the case, we could see the markets sell off harder than people are expecting. And this week, I was expecting that we would see a sell-off in markets because of that mismatch of what the markets have thought the Fed is going to do and what the Fed is going to say they're going to do. And once markets realize the Fed means business and they're going to continue to raise rates, things are going to have to be repriced. The bond market will be repriced and the stock market will be repriced. So we could see some volatility this week due to that. And that's pretty much what I've been expecting. Now, the other thing going on this week is we have about 100 companies reporting earnings this week. So we're going to get a whole lot of earnings data. And as you know, earnings are what drives stock prices. So companies that have great earnings and that exceed expectations are going to continue to move forward and do well. If companies miss their earnings targets, then they're going to sell off and go down. So it really is going to be a big report card this week in terms of how are companies doing? Are they meeting their earnings expectations or are they falling short? So far, earnings have been pretty good, but companies are dealing with different problems out there. Some are dealing with supply chain problems, some are dealing with higher interest rate problems, and the housing market cooling off due to higher interest rates. Some rely a lot on consumer financing, and therefore higher interest rates are going to adversely impact them as well. So it just depends on the company. But we have companies like McDonald's and General Motors reporting. Tomorrow we have Apple and Meta and Amazon and Alphabet reporting later in the week. That's about 20% of the entire stock market reporting earnings this week. So we're going to get a lot of data, and it's going to come fast and furious, and it's going to take a little bit of time to actually analyze what's going on in different sectors and which companies are really the standouts. But a handful of large tech companies really have the vast share of the market index. And so those big companies definitely have more weight than other companies. Some other companies that will be reporting earnings are Spotify and Snap on Tuesday and Apple on Thursday. And a lot of what the companies are going to report on will revolve around tech layoffs and whether they think they've done enough layoffs or they're going to be announcing more layoffs. This is being done to curb expenses. Also, we're going to find out more about digital advertising. How is it going at Meta and Google? Are companies continuing to advertise and spend money, or are they not? We'll also hear about their expectations for 2023. What do they think their earnings are going to be this year? And what kind of adjustments are they making up or down? Dan Ives is one of the most listened to tech analysts, and he's from Wedbush Securities. And he said the most important earnings for the market will be Apple's, which will give a glimpse into the overall demand story for consumers globally, while giving a snapshot of the China supply chain issues starting to slowly abate. So Dan Niles makes a good point there. A reopening in China also helped support the markets in January. And it's interesting to note that the largest gains were made in the communication services sector, which had the biggest advance in the S&P 500 in January. It was up more than 13%. So we'll see how it goes this week. We'll listen to the Fed commentary. They'll tell us a lot about what's on their mind and what their future plans are for interest rate increases. But if there is a mismatch between what the market thinks the Fed is going to say and what the Fed actually says, we could be looking for a sharper sell-off or pullback here. So all eyes will be on the Fed. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all my wealth mentoring podcasts are on my website at lindapjones.com/podcasts, where any topic you can think of, I've probably done a podcast for you. And it contains my entire podcast library, not just the most recent 200 like on Apple. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.